What is going on, investors? Hopefully, guys had a great day out there. That is right. It is Friday, and it is time for the FANG Stock Recap Show, where every Friday we recap all the major news for all the major FANG stocks, plus Microsoft, Tesla, NVIDIA, and we go over the charts from a technical perspective. We do this every Friday here on the show, and I tell you what, today has got to be one of the most jam-packed episodes that we've had in the year-long history of this show. I cannot waste any more of your time because, first of all, it's Friday, and number two, we've got a lot of news to cover. Kick things off like we always do with Facebook, now known as Meta. We started the week at $320 per share, ended the week at about $323 per share. The stock was actually trading lower than this, and then Mark Zuckerberg got up onto a presentation and announced a new corporate name called Meta after they outlined very extensive amount of changes in the meta, quote, metaverse. I tell you what, I watched the entire presentation, and at times I was cringing, at other times I was fascinated, and other times I was completely confused. And quite frankly, as a Facebook investor, I love it. I want more of this. I love companies like Facebook that could literally be putting their business in cruise control, be in the slow lane, have things just cruising along, be printing money and making tons of money. But no, what is Facebook doing? They're stepping outside the box. They're trying to get into a new lane. They're going to invest billions of dollars in an idea that may not work. And that might sound scary to you as an investor. And if it does, you probably should sell your Facebook shares. But when you're like me and you're wondering what's next for these companies over the next 10, 15, I hope I live a long time, maybe 20, 30 years before I sell this stock, well, I love that they're shifting gears and they're getting into this metaverse. Now, it's not going to come without a ton of scrutiny. I was watching the presentation and I said, oh, we got legal issues. We've got privacy issues. We've got all the issues that Facebook can't shed right now with their products on WhatsApp, Instagram, and Facebook, let alone if we get into this metaverse thing. This company is going to be facing all kinds of scrutiny, but I absolutely love that they're willing to take it head on. They're willing to invest this money, and I think it's interesting. Now, part of this is the fact that the company is going to be rebranding their name to Meta. And that new ticker symbol, too, it's not going to be FB anymore. It's going to be MVRS starting on December 1st. So if you see a funny ticker inside your portfolio starting December 1st, it will be Facebook shares changing their ticker. All things else will remain the same. They will. What I do like what Facebook's going to do is in the financials, they're going to break out the amount of money that they're spending on this. Okay. And a lot of it is tied to Oculus. Okay. That's not a platform I'm super in tune with, but during the presentation, I got a little bit more view on that. And we got a little bit more details on this metaverse. Okay. It's going to move into the office. They showed virtual office where think of it's like a Zoom call, but I'm able to turn and look and see a person there. They talked about having holograms. They talked about being able to change what's on the walls. They showed images inside people's homes. There was just a lot of things going on here. I would encourage you to dig up this presentation that Facebook did and have a look at it. It's really fascinating, but then you'll also see the parts where I was literally cringing. I thought it was interesting. Now, probably the news that got hidden underneath of it is Grand Theft Auto San Andreas will be making its virtual gaming debut on the Oculus Quest at some point very soon. I thought that was an interesting title coming to the Quest. Now, Facebook is said to be investigated by the FTC over internal disclosures. This relates potentially to a 2019 FTC settlement over privacy concerns. And so it could be that, look, Facebook's going to be facing this stuff for the rest of the company's history. It doesn't matter if they're Meta or they're Facebook. They're going to be facing this all the time. It's something that we've got to be comfortable with investors. Now, some of the big news of the week for Facebook is they did report their earnings earlier this week on October 25th. Revenue came in at $29 billion. That's good for 35% year over year. Didn't quite meet, I think Google, which we'll talk about here in a second, obviously, grew their revenues by about 40%. Facebook in there at 35%. A lot of the talk was on those Apple iOS 14 changes that does not allow Facebook to show as many targeted ads based on your web history, based on the activities that you've done on your phone. Now all that data is essentially hidden unless you've given Facebook access, which when we're looking at the studies out there, almost nobody is allowing these companies. I mean, when I say almost nobody, it's a very small percentage of people are allowing these companies like Facebook to track. And so it's putting a dink in their earnings and a dink in the guidance. But my guess is these companies will eventually start to figure this out and will move forward on that. Moving forward to Apple, start of the week at $148 per share. End of the week at $149. You had a buying opportunity today, I feel, at the 145, 146 level. We'll talk about that more from a technical perspective. I did buy the dip on this one, and I'll talk about that from a technical perspective here in a second. Apple reported their earnings. Their revenue came in at just $83 billion. Yeah, that's not for a full year either. That's for a quarter, okay? And not even their best quarter. Their best quarter is actually coming up. $83 billion worth of revenue. That's good for 28.9% growth. Absolutely fantastic financials. And I was going through them yesterday on the video that we posted here on the channel. I'll include links down below, probably on the first pinned comment. If you missed any of our FANG stock recap videos, I think, look, maybe I'm biased. I think we did a pretty good job on them this quarter. I really tried to go in as in-depth as I possibly can, and my understanding about these companies just gets better and better the more we start going through these. So I'll include a link to those below if you did not get to see them. Now, Microsoft took away the most valuable company title away from Apple, and we'll talk about this more, especially when we get to Microsoft. I'm viewing Microsoft really over the next 6 months is basically like inflation-proof, supply chain proof, because when you think about Microsoft business, yeah, they got the Xbox, they've got some other exposure to supply chain, they've got other exposure to maybe labor shortages, labor price increases, but not nearly as much as Apple, not nearly as much as Facebook in terms of the iOS changes, not nearly as much as Amazon, which we'll talk about here in a second. I really like Microsoft going forward for the next 6 months. I think that stock, when we look at it from a technical perspective, absolutely blowing up. It has taken away the most valuable company away from Apple, but I think that gives you an opportunity to scoop up Apple while the company is struggling with some of the supply chain stuff, which I think will loosen up sometime next year. Now, the Twitter CFO, we're slipping this in here, but he said that the Apple privacy changes created a level playing field. So hang with me here. So Apple made some operating changes, and we've talked about it broadly here on the show. And if you're not really in tune with those types of things, basically when you are surfing your iPhone, if you were on a certain website or in a certain app, well, other apps like Facebook, like Twitter, like any app basically could have access to the websites you'd been in, what products you might have sitting in a cart over at Amazon or some other Shopify shop, and they were able to show retargeted ads to you. Well, Apple iOS basically turned that feature off and made you opt in. So every time you download or open a new app, they're going to ask you if they want to be tracked. And basically the way Apple words it, like almost nobody's clicking on allow, okay? Almost nobody is. And so most people are blocking that ability. And the CFO made a good point over at Twitter saying this actually leveled the playing field because Facebook had such a gigantic lead in this and had so much data and has so much users that it actually kind of made it difficult for smaller competitors like a Twitter, maybe like a Pinterest, those types of websites to compete against them. Now this kind of leveled the playing field. I actually kind of agree with that statement. And I don't think it's necessarily a bad thing. I spend a lot of money. I just totaled it up. We're on the 29th day. I spent like $13,000 on online ads over the last 29 days. And look, things have been going absolutely phenomenal for me, but I have noticed maybe some of my competitors aren't doing as well because I'm spending more and I'm making more, baby. So I like Apple's changes, at least from the seat I'm in right now. Now, Apple is likely, look, the FANG Stock Recap show would not be good if we didn't have the FTC or some government body looking after FANG, and Apple is likely to face a DOJ antitrust suit as the probe of that speeds up. Here's what I just find completely ironic is all these companies spent an enormous amount of money to get the Democrats elected in the last election. They supported Joe Biden almost exclusively. And here we are, week after week. The Biden's Justice Departments and the FTC are coming after these companies. I guess they get what they asked for. So we'll see what happens here. But look, I'm kind of joking there. I don't think it mattered who got elected. I think these were coming down the pipe. Either way, these are popular with a certain segment of voters, not necessarily with investors like ourselves, but this is popular with some voters. And these companies will navigate this fine. Look, they got teams of lawyers. They'll be able to fight this stuff. They've got tons of cash. They'll be able to outfight these things, maybe get a slap on the wrist, pay a fine, those types of things. Now, moving on to Amazon, start of the week at 3,309, went up nicely, actually up into an area where we thought this thing could break out, and then it reported earnings and boop, off a cliff. The stock ended down. It was down much more today, but actually rebounded nicely towards the tail end of the day, ended the day at about $3,372 per share. Now, Amazon disclosed its stake in Rivian, which is an electric truck maker, and looks like a promising truck maker. Okay, they need to put these trucks out on the road in mass quantity, like pretty much every EV maker outside of probably like Tesla and maybe a couple of the Chinese ones like Li Auto and NIO. But look, Amazon has a massive preferred stock stake, looking at 20% ownership, which has a carrying value of about $2.7 to $3.8 billion, depending on where Rivian is valued at. That's pretty big, okay? I know Amazon's a $2 trillion company, but that's pretty big. Now, what was big was kind of the big disappointment that we saw out of Amazon. So they missed on their EPS, no big deal. But really what we saw is really slowing revenue growth. So I talked about how Facebook grew in the mid-30s. Apple grew nearly 30%. We'll talk about Google, which grew at like 40%. Talk about Microsoft, which grew in kind of that mid-20s%. Tesla reported last week, I think they grew like 80 or 90%. And unfortunately, for Amazon shareholders like myself, we only grew 15%, and they're guiding in the next quarter to only grow 4 and 12%. That's really yucky, and I understand they're coming up against tough comps. Okay, this time last year, people were staying at home. They were ordering stuff online. They weren't going out. They weren't flying. They weren't traveling. They weren't spending on their money on all this other stuff. But we're really seeing the impacts of Amazon's business models disrupted. What's Amazon's primary business model outside of AWS? Look, we could talk all about that and how that was a great quarter for that, but I think we basically expected that. Amazon.com is known for having a full product of catalog. So if you wanted to go there, and I bought a microphone, I bought 2 or 3 microphones yesterday for different products that I wanted, but I was going to have to wait like a week to get them on Amazon. So a full breadth of product is what Amazon is known for, and even more importantly than that, next day delivery or 2-day delivery. And we're seeing delivery times pushed 3, 4, 5 days, 7 days, depending on what you're shopping for on Amazon. And it's taken away the company's competitive advantage. So instead of shopping on Amazon, maybe you do a buy and pick up over at Best Buy or Target or Walmart, or you go to a local store and you get it at a store because you're able to get it that same day. Whereas in the past, you were able to do that with Amazon. I think Amazon's competitive advantage is going to come back, but it's not going to come back without some pain and some expenses. But unfortunately, and look, I think investors are comfortable with that. I think we're comfortable with the fact that Amazon is having to pay their workers more, having to pay more for delivery, air freight, all those types of things. Unfortunately, 15% revenue growth just isn't going to get it done. Period. Okay? When we look at all these major FANG stocks, the valuations that they have, the valuation is largely tied, especially when we're coming to Amazon, which is not valued on profits. It's not valued on EPS. It's valued on revenue growth. And they only grew 15%. That was disappointing, in my opinion, in the most recent quarter. Now, moving on to NVIDIA. Great week for NVIDIA. We talked about, actually on last week's show, got to pat myself on the back every once in a while, but this stock was ready for a breakout. We talked, I think it was NVIDIA, Microsoft, and maybe one other stock was looking like it was ready for a breakout. NVIDIA did that, started the week at 229, boom, up to 255 on NVIDIA. Now, unfortunately, we got some bad news. The in-depth EU probe into planned ARM acquisition. So the EU is set March 15th, which is many, many months away now, for a ruling on a transaction according to the EU filing. So this is NVIDIA is trying to acquire ARM, which its chip technology is being used by Apple, being used, in my opinion, probably by almost exclusively by all the next generation laptops. If you're not familiar, Apple has just released a new M1 chip, and they just released last week these really powerful MacBook Pros, and people are getting these in hand and realizing this isn't just an incremental upgrade when we're talking about chip technology. We're talking about a giant leap way over and above where we were in the past, and a lot of it has to do with ARM's technology. So the industry has a lot of reservations about NVIDIA potentially taking this company over and then maybe raising prices or not allowing a bunch of companies access to ARM's capabilities. We'll see what happens here. I hope this deal goes through. This would be an amazing deal for NVIDIA. Now, if it doesn't go through, not really that big of a deal. NVIDIA will likely still be able to use some of ARM's capabilities, and they'll still be able to produce some of the best graphic processors and the best chips out there in the market. But this would just lock up this business probably for the next decade and a half. This chip technology, again, is a giant leap. It's not an incremental shift. We're talking about a giant leap forward, and we're just on the beginnings of it. Okay, Apple is on the beginnings of it, and I think all laptops over the next 2 or 3 years will all feature this type of technology, and you're going to notice just a massive performance boost, battery, everything gets better with this new technology. So I'm really excited if NVIDIA is able to complete that acquisition. Moving on to Google. Oh my, Google started the week at 2,722, and it popped up into 2,960. You guessed it. When we get over to this from a technical perspective, we said, hey, you got to get it basically close to 3,000 on this one to look like we're reversing trend on Google. It looked like this thing, I mean, it's been on a year-long uptrend. We're expecting it to end, and I thought it did. But no, it didn't. It's back in an uptrend. We'll talk about that from a technical perspective here as well. Now, Google posted their earnings, and I think they were the best. Okay, I really loved Apple's financials. I really appreciated Microsoft and even Facebook's to a certain degree. But Google grew their business 41% year over year, and this is with a ton of talk about those iOS changes. Snapchat didn't navigate them very well. Twitter did not navigate them very well. Facebook had to lower guidance because of them. Okay, we're seeing massive disruption in the online advertising business because of the iOS 14 changes that were rolled out over the last quarter. Well, Google said, psych, that doesn't matter to me because we were up 41%, and it makes a lot of sense because if you think about the way Google ads work is you're typing in best restaurants in Las Vegas, best stocks to invest into Google. You're basically giving them the query and they're showing ads based on that query. They're not necessarily going into your phone and seeing what websites you've been to. Okay, so Google does do that when they have the capabilities to do that, but they don't have to. Okay, same thing with their third-party ads. So I own a number of websites that have a range of topics, and the ads that are shown on those websites relate to the content and to what that website's content is about. So basically, Google is like spoon-fed the content, spoon-fed the context of what the ad should be, and then they match ads accordingly. And look, it worked brilliantly over the last quarter where we were up 41% year over year on those revenues, and it shot this stock higher, which makes a ton of sense. Now, Apple shares hit an all-time high. Edge closer to 3,000. I think I said Apple. I meant to say Alphabet. And we talked about how the stock is back in an uptrend. We'll talk about more of that towards the technical segment of the show. Now, on the Alphabet call, the Google call, they said the iOS changes had a modest impact on YouTube ad, which I could see to a certain degree. Okay, sometimes YouTube, in terms of the thumbnail and the title, I'm sure Google is probably going more off title and description to show you ads. For example, if you watch my channel, I have YouTube Premium, so I have no idea what type of ads play on the videos that I post, but my guess it's a lot of business stuff. It's like B2B stuff. It's investing, stock market stuff, because that's the title of the video and that's the description. But my guess is some contextual ads could probably work really well on YouTube as well. If you were on a certain brand, like if you were surfing Louis Vuitton and then you come over and search, just start watching videos on YouTube, well, Louis Vuitton might want to advertise against that, even though it might be a video about finance or basketball basketball or something like that. So it might have a modest impact, especially on YouTube, but I think Google search absolutely not, because those were contextual based ads based on the keyword that you typed in. Moving on to Microsoft, which is now the most valuable company in the world, started the week at 307. I previewed that this stock, along with NVIDIA, I can't remember the other one. You could probably search into the Fang Stock Recap Show recap, but this was on a breakout alert, and it did. It went all the way up to $331. This is on the heels of reporting earnings that were up 21%. So modest, okay, not like a Google that's up 40%, not like a Facebook mid-30s, and even Apple's kind of, I think, was higher than this as well, but it certainly beat Amazon earnings as well, and this was just straight profit across the board. It didn't look like Microsoft had any problem with iOS, didn't have any problem with supply chain, didn't have any problem with labor shortage. Like, they didn't have any problems. And I even put up the video, and I put it up with the thumbnail, quote, Biden proof. I couldn't put like it wouldn't fit like inflation proof or supply chain proof. So I just put Biden, not really blaming these things on the president. The president has very little to do with these kinds of things, honestly. It doesn't matter who the president is or where you're from, right? But basically, I view Microsoft as kind of Biden proof, okay? This company is not facing they're facing some like DOJ stuff, regulatory stuff, but not a lot, not compared to Apple and Facebook and Amazon, and Google. Like, this company is kind of skirted away from that, and from the supply chain perspective and those types of things, this company is flying on all cylinders. So I would expect over the next 3 to 6 months, this stock will probably be flying high, in my opinion. Now, Microsoft, as we talked about, took the most valuable company title away from Apple, mainly for the reasons I say, I think, because Apple is legality, regulatory, supply chain, inflation. Those things are hurting its business, and I don't think any of that is going to go away over the next 3 to 6 months, and I think investors are just kind of front-running that and anticipating that. Now, Microsoft scoops up a content moderation solution provider called 2Hat. Now, we talked about this broadly when we've talked about this on the Fang Stock Recap Show for like 3 months now. Microsoft is doing a lot of little acquisitions. When we looked at Microsoft's balance sheet, it had a boatload of cash. I mean, they're like a billionaire with billions just sitting around on the bank, okay? So this company has a ton of cash. From a regulatory perspective, they are not going to allow this company to consolidate the software industry. They're not going to be able to go acquire like Salesforce.com, which I don't necessarily think they'd be in the market for, but they couldn't, buy Slack. They couldn't buy like Dropbox or something like that. The regulatory environment is just not going to allow them to do that. So what is Microsoft doing? And I think it's a very, very smart strategy. They're doing a ton of smaller acquisition. I put small in quotations because these are probably $10 million deals, maybe even $100 million deals. These are probably pretty big deals in the grand scheme of things. But when you're the most valuable company in the world and you have hundreds of billions of dollars at your access, whether it's cash on the balance sheet or potentially through, borrowing money from a debt perspective or issuing more shares to acquire this company, basically, like, they have a blank check or an unlimited, debit limit on their credit card. They could buy any number of these companies, and that's what Microsoft is doing. I love the strategy. Moving on to Tesla. Sorry, I didn't have Tesla all set up for you guys. Tesla started the week at $956 per share, and I think Tesla was the last stock we said was on breakout alert, and breakout it did. It went all the way up to $1,114. I think I got this perfectly. I mean, you could tell, it's Friday. I love patting myself on the back. I believe last week's Fang Stock Recap Show said NVIDIA, Microsoft, and Tesla were all set to break out, and all three of them did. And I'll talk about that from a technical perspective as well. I know a lot of you are watching this. You're buy and hold investors just like me, and you have maybe a retirement account, a self-directed 401k, whatever it might be. Maybe you're doing this for your children. So, you're buy and hold, but some of us like to trade on top of that because we're following the market so closely. I'll show you again what I saw in NVIDIA, Microsoft, and Tesla that made me believe these things were going to break out. And it's my most favorite setup. If I had more time, I just was in the hospital with my son. He just had a broken arm. They had to reset it, but it was mildly serious. If I had more time, okay, and I've been dealing with all this other stuff during the last week, I haven't had a lot of time to trade these stocks. Otherwise, I would have, because when they set up in the manner that they did last week, it's just a predictable pattern what what's going to happen. Tesla can become a $2.5 trillion company. This is Loop Ventures' Gene Munster. He's a famed Apple analyst as well. He thinks they're going to be able to, this is Tesla, going to expand their revenues from about 70 billion all the way up to about 400 billion over the next 5 years. If you do an Apple-like multiple, which is about 6.5 times sales, which I don't think is out of the question. When we did Tesla's earnings last week, it's a company running at like a 30% gross margin, which is really about what Apple runs at. Apple runs at like 30% net margins. So Tesla not quite as good, but they could get there. Okay, it's possible since they're there now. It's possible they could start squeezing out 30% net margins. And I think absolutely you could pay 6 times sales for that. And that would impugn a 2.5 million would be amazing. A 2,500. It's Friday. Give me a break. $2,500 stock price on Tesla. That's nearly 2.5 times higher than where the stock is right now. That would give you that $2.5 trillion valuation. Now, maybe the comedy relief of the show is the GM CEO says, absolutely believe we can catch Tesla in EV market share by 2025. Wait, let me check my phone. What year is it? Wait, it's 2021. It's almost 2022. They think they're going to catch Tesla in 3 years in EV market share? Oh, come on. That's a joke. Come on, please. There's nobody. I don't even think she believes that, let alone anybody in the stock market. Now, Tesla soared this week, not because of earnings. That was last week, but soared after landing the largest EV deal ever with Hertz Rent-A-Car, which I thought was in bankruptcy, but I guess not. And they're set to plug in 100,000 cars. Now, we cover Tesla enough here, and every month they report the amount of deliveries that they do. And we're seeing they're on it like a 250,000 car run rate, somewhere in that 200,000. This is to be delivered over the next 14 months. So this is about like 2 weeks of cars basically bolted on. So very interesting from that perspective. I also know, just because I've reserved 3 Teslas over the last month or so, I know you can lease these cars incredibly cheap, but there's no buyback option. So I can lease a Model 3 for like $200 or $300 a month, but Tesla retains the right to take that car back. I can't personally buy that. Otherwise, I think that'd be a fantastic deal from a tax perspective and likely a cost perspective as well. So I chose to buy my Teslas outright. But what I think is interesting is Tesla's probably going to have all these cars coming off lease. Well, if they've got customers like Hertz that are willing to take on some of these cars, that could be absolutely fantastic, and I think could really expand the margins over at Tesla. Here's the other thing that I thought was interesting with this Hertz deal is Tom Brady, just legendary quarterback. He's going to showcase Tesla vehicles in a new Hertz ad. So Tesla doesn't spend money on marketing. I think, as we all know, the company has not done that traditionally like other car makers like GM. I mean, they advertise the heck out of their cars. Tesla does no, quote, traditional advertising. They don't actually pay for the marketing. Well, here's another example where they got an order for 100,000 cars, which is, I think it's like over $1 billion worth of revenue, maybe even closer to $2 billion worth of revenue when we're talking about the revenue on that 100,000. And what do they get on top of that? They get one of the most recognizable and most respected athletes in the world to now advertise for them for free. I mean, this is just brilliant. Me as somebody that studied marketing in college and still appreciate it to this day, I mean, I love this. And if Tesla can continue to do that, basically get paid billions of dollars for their product and then get that company to advertise for them. I mean, I know it's Friday, but that just made my Friday even better. Now, moving on to the technical analysis of the show, starting December 1st, this will be Meta, but right now we are looking at Facebook from a technical perspective. We're in the smack dab middle of a range. This thing's between 315 and 330. It's having trouble breaking out above, and it's not really breaking out below. In fact, any break below 315, in my opinion, is a buying opportunity for Facebook. If you believe in the metaverse, if you like what they're doing, look, I am not a Facebook fanboy. I'm almost never posting on that. I have come to appreciate Instagram a little bit more. I got a lot of people messaging me on there. I'm a little stacked up on that. I've been a little busy with some family stuff. I'll get back to all the messages that I have sitting there. But look, I like their products, but I'm no fanboy. I love what they're doing with the metaverse. I have no idea if that investment will pay off, if they'll be one of the market leaders in that, if they'll be able to capture a lot of market share in that type of spending. But look, if you believe that, you got to buy this stock under 315. Okay, we are still, but the thing to understand, we are still in a downtrend with Facebook. So I would be very careful. It's not like I would take my entire account and my Robinhood Gold balance and my margin and dump it all into Facebook. We are not at that level. Now, if we came down here to 255, 260 on the stock, I think we'd have a little bit different story. If we come down here to 300, probably be a little more aggressive, but I like Facebook where it's at, but just understand this is still in a downtrend. This stock is in a downtrend, okay? It is not broken out of it, and we are in this downdraft, okay? You're looking really, you got to have a break above 330, which I tried to do several times this week, and it just was not able to do that. Now, probably the buy of the week was Apple. After reporting earnings, actually before reporting earnings, we were up here at 152. Looked like if we had a good earnings reaction, look, this stock could have broke to all-time highs, up over 150, 160, and really started getting off to the races like we'll see with NVIDIA and Microsoft and Tesla here in a second. When you get above all-time highs, it's like your airplane reaching cruising altitude. It just blows through all the turbulence and then boom. Okay, but unfortunately, the market rejected this now, but fortunately it created buying opportunities. I came in here right in the beginning of the day. I did the video last night on Apple and I said, oh my goodness, these companies' financials fantastic. Despite all their headwind, I mean, they have like a 30-mile-per-hour headwind blowing at them, okay, from a regulatory perspective, supply chain, labor, all of that is just an absolute disaster, and they put up a heck of a quarter, in my opinion. And the stock did rebound back up here to a level of resistance right at 150. You'll be watching Apple closely next week. Tell you what, if we can get momentum up over 150, really need to get momentum up above 154, 155 on this one, retest this 156. You break above 156 next week, which is only $7 higher than where the stock is right now. Look out above. That's why I stepped in pretty early and aggressively on Apple. And when I say I step in, like I'll step in constantly in my son's accounts, and we're talking like $30, $40. My son got $10 the other day because he hurt his arm. So I'm stepping in constantly, just constantly investing their money. They should be 100% invested. In my IRA account, I'm a little more judicious. And so when I say I step in on a stock, it's actually a pretty big deal because I don't buy, that's probably only the fourth or fifth time I bought a stock in that account all year long, and I'm allowed $6,000 in deposits. So, and I've got plenty of cash sitting over there as well, stacking up. Now, moving on to Amazon. This thing broke down. I thought we were going to break below 3,300. If you broke below 3,300, you had a buying opportunity down here with Amazon, but we're now smack dab. It's kind of like Apple. We're just kind of smack dab in the middle of a range. We're between 3,300 and 35 on this one. I think you could buy it down here at 33 if you want to. We're looking for a break above 35 specifically, and then on the breakout like Tesla, NVIDIA, Microsoft, you're looking for a break above 37.70 on that one. NVIDIA broke out. So we talked about it on the last show that we did. If you broke above 130 on a big candle, look out above, and that's what happened. We went from 230, went from 230, got to slow things down a little bit. It's Friday. Went from 230 up to 250 in like 3 or 4 days over at NVIDIA. And right now, so here's the thing. When a stock breaks up, let's look at NVIDIA just really quick. Okay, so back here, the stock was sitting at 180. That was basically the all-time highs, and it broke above that, went from 180 to 200 like in like 2 weeks basically, but then came all the way back down and retested 180. Same thing happened here, okay? The previous highs was 209. We made them here. Previous high was 209. You put a big green candle up. You went from 209 up to 230, but guess what? You came all the way back not only to 209, but you came back and back tested all the way to 199 on this one. Same thing I think is going to happen here. So if you think, oh, I missed NVIDIA, dang it, the stock's run away from me. Don't worry, okay? I think we're going to go from 230 up to 250 something, maybe 260 something, but I think you got a high probability coming back down here and retesting 230. If you retest 230 on NVIDIA, that is your buying opportunity. Google did, oh man, kind of the low probability thing that I thought would happen. I thought this stock would wave out. I'm completely honest. Look, when I get things right, I'm the first to tell you here on the Investor Channel. You don't have to go to the comments down below and listen to anybody else but me. I will toot my own horn as much as I possibly can, but I will also toot it when things don't go exactly how I thought. I thought for sure with Google, we were going to wave sideways with this one, and you were going to get an area of consolidation between 27, maybe as low as 26 on this one, up to about $3,000 per share. And I thought we were going to wave out. Now, that still can happen because actually next week is a very critical week with Google, but we actually popped back up into this channel. So we've got this big old up channel here, and we broke through it for the first time like a couple weeks ago. And that's usually a sign that that trend is over. And usually what happens is you come back up here, back test, and you get rejected. And when you see that, it's telling you, oh, sellers are stepping in at this $2,800, $2,900 level with Google, and the buyers have just dried up at this level, okay? But what we saw this week after earnings, just absolutely stellar earnings. And somebody asked me a question in the comments, like what FANG stock I thought had the best earnings, and I think it was Google. Look, probably closely behind that is probably like a Tesla, okay? Their earnings weren't crazy unexpected, but this company just continues to churn and churn and churn and churn along, and their competitors just like can only put out press releases that they might compete. They don't actually have the cars or the capability to do it yet, okay? They're still dreaming about competing with them. So I loved what Google did. We are back up in this up channel. It's confirmed if we can get back up in the middle of this, okay? We need to get, I think, well, when I say well above 3,000, I think you need to get to 3,030, 3,100. Absolutely, you'd be well up into this uptrend. You're looking to get back up in here, and if you do, I tell you what, this was probably just a tiny blip on the radar. Now, if we get rejected up here at 3,000 and we come back down, buying opportunity for Google down at $2,700 per share. Moving on to Microsoft. Again, we talked about this one. Got above 306, 310 on this one, probably more specifically. You were going to rally to the upside. You're now up here at 331. Who knows how long this one will rally? You look at like a Google. I mean, this thing is actually in a pretty long term. I mean, we're talking about several months now. I mean, you could put some kind of channel in there, but this thing is channeling upwards, okay? I think you will have an opportunity for this one to hit its head on some sellers up here, and you'll get a retrace probably back to about 310, maybe lower than that, but I think you get any retracement down into the 310 range, that can be your buying opportunity for Microsoft. Tesla did the same thing that NVIDIA and Microsoft did. We broke above all-time highs, which are right at basically $900 on the dot, and then we went straight up in the air like one of Elon Musk's SpaceX rockets. This thing is just catching altitude now, okay? It's way up here, way up at all-time highs, $1,120 per share, and who knows when this thing will stop, okay? Tesla is a big, I mean, I'm not breaking any news here, right? Okay, Tesla is a massive momentum stock. When you look at the stock chart, this thing goes on big runs and then goes sideways, goes on runs, comes back down, goes on these big runs, a pullback to $1,000 per share, buying opportunity with Tesla. That was the FANG Stock Recap Show for Friday. Hopefully you guys had a great week out there. Don't forget to hit that like button and that subscribe button and check out my other videos. I am so close to 100,000 subscribers. I can like taste that Google plaque that they're going to send me, and I'm going to put it smack dab in my living room. I'm not going to put it in my office. Forget this. I'm going to put it in my living room, so every time I'm sitting in there watching TV, I can look at it. Please tell your friends about the channel. Please subscribe if you haven't already. Like literally all I want for Christmas this year is 100,000 subscribers and a YouTube plaque. Everything else is just gravy at this point. Thanks for tuning in, guys. I really appreciate all your support. We'll see you again next week. Good luck with your investments.